All right, guys, back to work. Thursday's over. Friday is right around the corner. Want to make sure we finish up the week firmly in the green with you guys tomorrow. It's Thursday evening. It's September the 9th, 2021. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're watching for the first time tonight, it is great to have you with me. My job tonight is to help us find the best trades, setting up for Friday, finally Friday's trading session. I got a great video in store for you tonight. Charts are already in the background. As you can see, got the gold, got the Nasdaq, and got the S&P all ready to rock here for tomorrow. Got a bunch of great trades on our radar, seeing a bunch of ranges on the charts. We're trading the edges, buying low, selling high, looking for some breakouts tomorrow, maybe some reversals on our favorite markets tomorrow as well. By the end of this video, not to worry, you'll know my favorite trades for tomorrow. You'll also know some stuff to avoid to keep yourself out of trouble and keep you in the green going to this first weekend of the month of September. Now, before we jump into this video tonight, though, as always, make sure you subscribe to this YouTube channel. I publish this video with my best trade ideas every evening on this YouTube channel, so make sure you subscribe, hit that little bell icon so you always get notified every time we publish something new. And if you have any questions for me, don't be afraid. Drop those questions in the comment section. I love to answer questions in the comment section. Don't be shy down there in the comments. And as always, I appreciate you guys tuning in every evening, spending some time with me here on these charts. If you enjoy this video as much as I enjoy making it, hit that like button for me here tonight on this nightly newsletter. But enough of the intro, though. Time is ticking. I can't believe it's already Friday right around the corner. What are we looking at for tomorrow? Well, like I said in the intro, we've got a bunch of ranges right now we're still looking at on the charts right now. Range on the S&P, range on the Nasdaq. Big old range, kind of a strange looking range on the gold right now. Ranges are magnets, which means we're buying low, we're selling high, we're focused on failures. And obviously, right, whenever we have a range, we keep an eye out for breakouts, right? Get a lot of really great breakout opportunities here in really both sides, right? We may see some short squeeze breakouts going higher. Again, we may also see some bear breakouts going lower here. So not to worry, I'm gonna cover all the bases tonight, buying low, selling high, trading those breakouts, and I'll make sure you guys are ready for everything you guys need here for tomorrow, whether you're trading with us in the trade room or you're trading on your own. Before we jump into each individual chart, though, tomorrow is a Friday. Let's make sure we know what we're looking at for tomorrow. Tomorrow, of course, is Friday, September the 10th. We got some big news tomorrow, right? Got the PPI number tomorrow morning at 8:30 Eastern time. That is an inflation number. So, of course, gold is something I would definitely be watching tomorrow morning early in the trading session. PPI number being inflation. Inflation, of course, really ties well into the gold futures. So definitely keep the yellow metal on your radar for tomorrow. Also, don't forget, we're watching rollover. We are watching contract roll right now on the Emini and the Nasdaq. As I mentioned in last night's video, we are watching rollover. Right now, the 921 contract is still the active contract on the S&P. We're probably going to see tomorrow morning, when you wake up tomorrow morning, get back to your desk, you're going to probably see that December 21, that 12/21 contract come pretty close to taking over that 921. So tomorrow, and this goes for both the Nasdaq and the S&P. Well, it goes for all the E-minis for that matter. If we are really, tomorrow morning again, if we're close, if I see if I see that 12/21 contract tomorrow, if it's close to that 9/21 overnight volume, I'll probably jump over to that 12/21 contract. If they're really wide, if they're big difference like they are right now, right? 500,000 contracts in the 12/21, 1.7 million, right? If there's a big gap like that, we'll stay right on that 9/21 contract tomorrow. Remember, we want to trade the contract month with the most amount of volume because that's where liquidity comes from, that's where consistency comes from. So you want to make sure you're trading the right contract tomorrow. So tomorrow morning in the trade room, 8 o'clock Eastern time, we'll take a look at that about 7:30, 7:45. We'll see which one has more volume. If they're close, right? If they're relatively, if the S&P has a couple thousand contracts difference, I will make that jump up to the 12/21 contract because it is a lot easier to make the roll at the beginning of the morning than to try to roll midday, mid-session like 10:15 or 10:30. So, there might be a little bit of gray area there tomorrow, but not to worry. I'll keep you guys posted tomorrow morning in our trade room. So be aware of that. We are watching rollover on the Emini. No rollover on the gold, though. We got gold on autopilot until almost the end of the year here. So we get the 8:30 number for tomorrow, right? PPI number. We're watching some rollover. Tomorrow, of course, is a Friday, so it's early in, early out. You got to have a good reason. You know, what I always tell my clients, you can trade all day on Friday, but you got to make sure you're not forcing trades. Remember, trading is a lot like riding a bicycle. It's a lot easier when it's moving, right? When it's moving. Just like a bicycle, it'll tip over left and right if it's not moving forward or backwards for that matter. Same thing goes for the market. So we're going to trade tomorrow as long as these markets will keep moving for us. But I'll tell you, if things are slow, 11 o'clock, 11:15, 11:30, that'll be our sign. Take a break for lunch, and you can always trade the afternoon session on Friday if you see fit. We'll talk more about personality and kind of when the cutoff is for tomorrow, but usually it'll be about 10:45, 11 o'clock, 11:15. We'll start paying attention to the market's personality. Now, of course, don't forget tomorrow morning, 8 o'clock Eastern time, we're going to do this stuff together in our trade room. I would love to have you there right there with me, trading right alongside me. I'll put all of the membership links, all the details, I'll put them below this video, either on the website or in the description of the YouTube video. So hit the description, grab those links, and I'll see you tomorrow morning at the opening bell. Let's get back to our charts, though, here, because you guys did not come here to talk about news reports here for tomorrow. Got a lot of really nice trades on our radar here. The S&P and the Nasdaq are very similar. I would say they're a little bit different. We'll go over it in a second here. They're a little bit different. They're very, very similar. So a lot of what can happen on the S&P can also be applied to the Nasdaq. So be aware of that as we go forward. The gold, you could definitely tell gold had some sand in shorts today, right? Gold was a wild market. It is a range on the gold. It's a very wide range. And so wide ranges are ripe for breakouts. They also mean for some really good reversals of buying low and selling high. So I'm really excited about tomorrow, Friday's trading session. Let's jump first here into the S&P 500. Let's get this one going here, as always. Now, what's the most important factor here? What's the most important factor here right now on the Emini S&P? Let me get this off here, get some of these notes off here. Most important factor here is the bears, of course, finished the session with control on this market. I know, right? What a wild session. Big move down, big move back up. I talked about this last night, right? I warned you guys, don't chase it too far last night, and it's kind of exactly what happened there. Long story short, though, the bears definitely have control of momentum, and they go right into a trading range. Now, ranges act like magnets. So when the bears have control, what I do is I find levels of resistance up above the range and sell back down in. We find levels of support below the range and we buy it back in, right? We buy low, we sell high. Remember, buy low at support below the range, sell high at resistance above the range. Very, very simple strategy. Now, we also look for breakouts. Now, breakouts have to really show us some proof. As you can see, you can't really trust, a little breakout. So we definitely can look for a breakout on strength. For the bears have this beautiful spot waiting for them down here, 44.65. That's the next objective for those bears right now. And of course, the bulls, which between you and me looks like might be the easier money tomorrow, will be a reversal and a breakout going higher. That will probably be the easiest money to make tomorrow. Whether or not we're going to get it or not, I don't know. I know we're all traders, right? We can't see the future. We can anticipate, but really tomorrow morning we're going to trade whatever the market gives us, whether it goes up, down, or sideways. So my job right now is to kind of anticipate what the situation looks like, so I'm ready to go with all you guys tomorrow in our trade room. So as the market, let's say, goes higher, right? Let's say the market goes higher here. As the market tries to go higher here, and of course you want to stay out of the middle, right? If we go sideways here, stay out of that middle. If we go higher right now, I definitely like this area of resistance. The top of that channel, you'll notice, you get that kind of expanding triangle, right? There's a lot of reasons to love this area. I would like to short this area. However, what's my concern? My concern is a lot of momentum. So when it comes to ranges, one thing we always pay attention to is there's a very big difference when you have a bear market into a range. There's a very big difference between selling that move, okay, see how it goes into the range, pops up, and then selling this move. If it goes into a range, pokes lower, and then goes higher. See the difference there? Now we've got a lot of momentum. It's kind of slingshotting off of that low. This is a really, really important clue. We call this rotation off the low. This rotation off the low also gives the buyers an incredible amount of opportunity to take this thing higher, right? Because as we slingshot higher. So, long story short, as we get up into this area, fantastic level of resistance. I would love to sell up there. Great place to get short. But again, momentum is a concern. So what do we do in that situation? Remember, we want to sell high, but we get a lot of bulls now, right? A lot of momentum now going higher. What do? We let those buyers try twice. We use the power of what we call the 2-try rule. Let them try once, let them try twice. And once those buyers try twice up there, we'll now have their stops sitting right below that low, and we can sell right into those stops. We call these 2-try failure patterns. 2-try failure patterns. I'll talk more about the patterns here as we go. Now, as the market runs higher, can I buy this thing now? Oh yeah. Like I said, I would love to sell it, but I think the probably the easier money here is the long side. Let's say now we go back to the high now, but now instead of those buyers trying once, twice, and failing, now they hold that pullback and they jump. Right? They jump off the moving average. Didn't happen here, didn't happen there. So I can't buy that first pullback, but I can definitely now, once I see, we call these 1, 2, 3 reversals, 1, 2, 3 breakouts. I can mark up that high, I can mark up that low, and I can now buy that first pullback. Now, if you were to drill down, and I'm kind of drawing the screen right now, right? If you were to drill down into that area, what is a really common entry pattern is what I call a failure into a pullback combination. And what happens is, usually when they pull back below that channel, what will happen is it'll slip below the moving average, right? Price will actually pull back. If you were to kind of zoom in on that area there, price will pull back and slip under that moving average. That's where failures happen. That's where pullbacks happen. That's where strength moves happen. Now, I'm not going to go into all the details of all the price action entries. We trade price action entries in our trade room. What I will do, though, is I'll give you a much deeper dive into all the kind of entry triggers we use, how to find them, how to qualify them, when to skip them. I cover those details in our quick start class. What I'll do is I'll put a little pop-up there for you in the upper right-hand corner. So throughout the video tonight, when I talk about, buy the pullback or sell the retracement, remember the price action setups I talk about in that quick start, that free class, those are the ones I'm going to be using tomorrow. That'll kind of help you bring you up to speed here so you can really capitalize on this video newsletter. So again, as we go higher, 1, 2, 3, I mark up that high, I mark up that low, and again, I go in and buy that pullback. Again, I say buy the pullback. You know what I mean, right? Failure to pullback combination. There are a lot of variations of that reversal, that breakout. I go into more details of that stuff inside that quick start class. And again, we know where the market wants to go from there, right? Again, that will probably be where the money, not where the money is. There's money everywhere, but if I had to guess, that's probably where the easier money would be, right? Because you got that short squeeze. All the bears are short. They get stopped out. Market rips higher. There may be some very fast money to make going back up to retest those highs. Now, what if we go lower? Right, as we go lower, we're sitting at some major support levels down here. Great place to get long. Really great place to get long. You'll notice I have a measured move drawn in. 1, 2, 3. There's a lot of support down here. A lot of support. Major lows there. Measured move support. It's all stacked up right around. And again, with the range above us acting as a magnet. Now, as we go lower, how do I buy down here now? How do I buy down here? Okay, great location to get long. We're at support, right? Okay, that's great. What's the problem? Momentum. Very bearish. So whenever I'm trying to buy, and again, I know I've got that magnet right overhead. Again, great place to get long. Doesn't matter location. Location's great. I always ask those kind of two questions of you guys in the trade room, right? How's location and how is momentum? If you can answer those two questions, you'll usually be able to figure out what type of entry setup will be the best to look for. So we go lower, great location, bad momentum for the buyers at least. So what do? We respect that momentum. We let the bears try a couple times. I like to use the 2-try rule. Oftentimes what will happen is the bears will come in once. If you try to rip it too early, they'll come right in and hit it again, and that will oftentimes really punch. And so you don't want to get caught, trying to be too aggressive buying it back up. I've learned that lesson too many times early in my career, and that's exactly why I use the 2-try rule. Once we have the 2-try rule in play, now I can go out. All those stops are sitting right above that high, right? I can also draw a trend line, find some support there, and I can buy right into those stop losses called the 2-try failure. Now, what happens oftentimes on this when the market kind of rotates back higher is you can grab a new trend line here, find a new channel, and again, buy that first pullback. So it ends up being a failure, okay? Failure into that pullback combination. 2-try failure into that pullback combo, and again, you'll see more. I probably have 100 examples of this particular pattern combination, all put inside the member section in that free trading course linked up there before. So grab that as we go. How do we sell down here? Right? What's the plan to get short? It's very similar now to the plan to get long for the buyers going higher. I can't sell into this area. It's an obvious area of support here. I also know we have that measured move right there, which again makes a great place to get long. If we can take out these lows, if we can hold that pullback and then jump off the moving average, easy, right? Easy. Again, I'm not going to take the first one because we're at support, but I will gladly get aggressive and find whichever one of my entry setups I can find to sell short off the high of that channel, right? Again, we call these 1, 2, 3 breakdowns, and I've got my first test of that channel. Fantastic breakout setup. And again, there's a lot of variations of this pattern, right? Sometimes the market will shoot lower, give us a little trap down there, and we'll find a little trap right off that high. A lot of variations of that pattern setup, right? Failure into pullback combination, right? So trap, failure, pullback. Again, this obviously I'm simply sketching this thing up for you right now. Get into that quick start class and you'll see exactly what I'm looking for there tomorrow. We know where the market wants to go, right? That 44.65, 44.62. So we'll see what happens, right? We'll see what happens. Again, I think the buy side is the easier side right now, just buying off the low and buying the reversal. But, again, keep your eyes open, keep your options open. We'll trade whatever the market gives us here, whether we go up, down, or sideways. Let's keep going here. S&P looks pretty good. How about some Nasdaq? Nasdaq is very similar to the S&P. The one kind of big difference, as you'll see here, is there's a whole lot more support down there. Right? There's a lot more support right below these lows on the Nasdaq. Good for the buyers. Not so great for the sellers. The bears definitely have to get something going here to the downside. So real quickly, let me clean this thing up a little bit. By the way, you can find all of these charts posted on my blog at Sideways Markets. I'll put the link for you guys in the description of the YouTube video. You'll notice I've got 1 leg, 2 leg, 3 legs down. So we're pretty much sitting right at, major area of support, multiple levels of support down here. It's just tons of support here as we go. Wow, what if we go higher here? Right? As we go higher, same idea, right? We got that channel coming down. We definitely do have a bit of a, trend line there. Honestly, this trend line's a little bit too steep to really be made, very effective. I usually like those trend lines. Like, see how back on the S&P, like that trend line right there, that's perfect. That is a perfect trend line right there because it's not too steep. You know what I mean? If it was way up like that, it's like, come on, really? By the time we get there, this will be so bullish. You're not going to sell it. Maybe you will, right? But it's very difficult, short to get, right? This one, it kind of has that same feel to it. You know what I'm saying? It's like, all right. By the time we get up there, it's going to be tough. Well, we can do it. What are you going to do? Right? As we go higher here, get up into areas of resistance. I would think this area overhead here at that 610, 611 area, I would think that would be a great spot to get short. Right, so we get up off this low. The range below us acts like a magnet. Again, very similar here to the S&P. Remember, lots of momentum coming off that low. So as we rotate now higher, buyers once, buyers twice, stops are sitting right below that low, and I can now look for that signal to sell short with that 2-try failure. What if they hold it? What if they hold it? What if they pull back and rip that sucker, right? Yeah, 1, 2, 3 reversal, 1, 2, 3 breakout, same basic idea. Now, they had everything they needed there. They almost took it there, didn't get it right there, right? So I can't exactly buy that first pullback, but once I get that 1, 2 go, now we're in, baby. Now we can go out, find that high. I can go out, find that low. And again, think about how this could set up, right? We get underneath the moving average. The bears try to get short off the EMA. It's a lot of bullishness right now. It's a short squeeze. Everyone's trying to go back to retest the high. Those poor sellers trying to sell below the moving average. Failure, pullback, strength, trap set up, right, as we go higher here. And again, I'm going to go over more details of that stuff in that free quick start class, right? So failure, pullback, trap, strength move. And again, we know where the market wants to go, right? They want to take this back. They want to run this thing right back up to retest those highs. And possibly, tomorrow's a Friday. Fridays, we oftentimes do see those big moves on Fridays, right? Look back the last few months of Fridays, and you'll see, a little bit lower volume on a Friday morning, markets can really move. That's all-time highs right there, that 15,708. So what do you think? Do you think we might get a reversal going higher there, right? Get that move running and keep on going. It's definitely not out of the equation. So we'll definitely keep that open mind for tomorrow. So again, moving higher here, the buy side, the sell side are all pretty straightforward. Again, I think the buy side has a little bit easier, but I'll take whatever the market gives me here. How about the sell side? Going lower here, or as we go lower. Remember, again, stay out of the middle. Try to avoid trades in the middle here. Honestly, I think the buyers going lower have a really great opportunity. So let's say, for example, we make another leg going lower here. And then, of course, we take out these areas of support. At this point now, great place to get long because you got all the support down here. But what's the problem? Momentum. Momentum is not really very good for the buyers right now. So what do? Let them try once, let them try twice. And I hate to repeat myself so much, but welcome to trading. That's what trading is. Trading is repetition, because repetition, well, what do they say, right? Repetition is the stone that hones the knife of success. It really applies to trading. Same basic idea here. We're fighting momentum, but we have that range overhead here. Once those bears try a couple times, everybody is roped in now. Again, you don't want to get in too early on this, because oftentimes they'll come right back in and shoot it lower there. Once they try twice, now I know where stops are. And remember, you've got now that potential big pendulum swing now going higher. You can measure the amount below, project that going higher, and that becomes an easy objective in the short term. So if we can get that 2-try failure set up and then get that rip going higher, I can now mark up that new channel. Okay, don't be so worried about the range in this example, right? In this situation, if we can get that failure, that 2-try failure, and then grab that pullback, and again, I say pullback, but in all reality, when you drill down to look at it quicker, you'll see a lot of, again, failures, pullbacks, traps off the low there. If you've taken my quick start class, you know exactly what I'm talking about there, right? So again, failure, pullback, look for that pendulum swing. And then seriously, this thing may end up like, for example, we may see something like this where we run lower, the bears once, the bears twice. We get that shot going higher, right? So failure into pullback combination, very classic. And then we see it run, right? It really runs. Now, oftentimes when it runs like that, what you'll get is draw a new channel, right? Steep channel, find that prior swing. Like, that's always one of the trades I'm looking for whenever we see like a short squeeze, right? So 2-try failure. You see it all works, right? It makes sense, right? You're buying off that low. You're buying that pullback, right? And then, of course, as it rips, you're going, all right, this thing's done. Find that new channel. Again, find that trap or failure or whichever entry pattern we get off that. Targets are easy at that point now, going back up to retest those highs. How do we sell this thing going lower? That's going to be the tough part. It will be, right? Because you get all this support down here. Okay, this area right here, that's 17. This 17 area, right? 15, 5, 17. This is a lot of support down here. So in order for me to be confident getting short, and look at all the space they have. I'll tell you, there's definitely a lot of incentive for the bears to get this party going lower, but incentive isn't enough. We're going to see some proof out there, or else we'll just keep buying up off this low. How do I sell this thing as we go lower? There really are kind of two basic ideas to look for. This will also apply on the S&P. So first of all, we have to take out that low. Then the sellers have to hold a pullback and really give me a strong punch through that low. All right. Now be very careful if we see something like this, where, pulls back and goes like that. See, we may not be out of the woods yet. You know what I mean? We're still running right into that area of support. That's why I say I really like to get this thing down into those lows, get those bears to hold, and then jump. If I can get those bears to commit and really get a good jump off the moving average, now we know what's going on. Now we know they want more. I can now mark up that low, find that channel, and I can sell that first test, right? Repeat after me. First test is the best test. You only want the first test. What happens a lot of times, like I mentioned earlier, is you'll see it come back, go, and then go, right? You'll find that new channel, and then you'll get another move going lower, right? Then you find a new channel, right? New channel. And they might be similar, right? It may be similar, but it isn't the same channel over and over again. Very rarely it is. I shouldn't say never, right? It's very rarely is the same channel, right? So again, 1, 2, 3 breakdown. And I know I would love to trade that first one, but it's just not a very reliable trade, not where we are, right? I wait for the next pullback. That's the one I want. If it keeps going lower, grab the net, right? That's what I want. Again, maybe it's a trap above that high. Maybe it's a failure, whatever. All right, we'll see if we get there as we go lower. A second scenario you want to think about as we go will be kind of a spike in channel. That might be what we get tomorrow, right? And when you think about it, this whole thing, all the support over here, if we were to get this thing to, let's say, and again, this will also apply to the S&P, let's say, for example, they punch lower, but instead of it just jumping off the moving average, it grinds, right? Grinds. You know what I mean? Like that might happen tomorrow. That's one scenario, one variable. There's a lot of variables that may happen there. That's why our trade room is such a valuable resource for you guys. So if that happens, we're not seeing it jump off the moving average. At that point, it's almost the same thing. These are called spiking channels. That spike into a channel. How do we trade that? We wait for that pop up, get above the channel high. We wait for those buyers to come in. Try to get long. We have all of that momentum, big bullseye right back at that low. We're selling right back down, right, to retest that low. Definitely leave a runner on that. One thing about ranges is the breakout leg is oftentimes the measuring leg. All right, and we'll talk more about that here on the gold. But this is definitely something where if we could break this low and run tomorrow, there could be some really nice money to make down there, that 15, 415 down there. So definitely keep an eye on that for tomorrow. I'm sure there are some things here I missed tonight. So obviously tomorrow morning, don't be late to the trade room. Let's keep going here. Get the S&P done. Got the Nasdaq ready to go. Again, they're pretty similar, right? A lot of stuff will be the same here. What is going on with the gold? What's going on with the gold right now? The yellow metal here. As I said in the introduction tonight, it kind of feels like gold had some sand in its shorts here, still left over from Labor Day weekend. It looked a bit, back and forth, right? Man, oh man, what a wild session. Bottom line about this market right now, it's basically a big wide triangle. You can see the market rotating back and forth, right? So we rotate lower, we go higher, we go lower. Nobody's taking out lows. Nobody's taking out highs. See that? Right? There's been no lower lows. There's been no higher highs. We've had some small traps here and there, but it's pretty much just one big range. And that means, whenever you see a triangle like this, there's almost always going to be a rectangle right in the middle, and that's going to be your magnet. right? That'll be your magnet. So that rectangle, that 96 to 93 area, that's your magnet going into tomorrow. One thing about a trading range is especially a range of this size, is you want to understand how rotation works. So I mentioned earlier, we rotate down, rotate up, rotate down, rotate up. I put this little note right here because if we don't, let's say, for example, we go higher here, right? We go higher. That is what we call a failed rotation. We should see this market rotate back down. So if the market just simply takes off and goes higher here, what is that? That's a really big clue. A clue for who? Well, a clue for both sides. A clue for the buyers. They're getting aggressive. And a very big warning sign, right? A red flag for those sellers. So, we definitely have some good potential there if these buyers can get something going here, right? Maybe complete that pendulum swing from yesterday's range, which of course has us going higher, right? So, right about now, I want to sell high above those highs. I want to buy low below those lows. I want to do my best to stay out of the middle of this range. And it may not be easy tomorrow because as it gets narrower and narrower, so we'll talk about how to deal with some, as this thing gets a little bit narrower here, right, for tomorrow. Buyers would love to go back up into that 18-15 area. There's a big juicy range there, right, from earlier on, I guess late August, right, earlier on in the month of September. As we go lower, there's a lot of support levels down here. Again, so great spot to be a buyer off of that low. If we can crack below that level, we then have some targets looking for us at 74.6 down to 72. And that is a pretty big low. That's a pretty big low. That 74.6. You can see it's a pretty big low. So 72 looks like a pretty big nut to crack if the bears could push this thing lower here right now. So a lot of potential for a breakout. Right now we're going to focus on fading those breakouts, buying low, selling high, and of course trading that rotation. Now, what if the market goes higher right now? Because you'll notice again, I've got this pendulum swing marked up. I've marked up. Once I know where my range is, then I can measure the size of the move down, and I can project that the size of the move up. You'll notice this one, the amount we went up was pretty much right as much as it went down. So we call these the pendulum swing. They're very, very accurate, and they really are reliable targets, especially if you were to buy off that low, leave that runner target on the pendulum swing on the opposite side. Now, we have some concerns about momentum, right? Momentum's the big problem now as we go higher here. Okay, the buyers really have a fantastic opportunity if this market rips higher. Two reasons why. One is that failed rotation. The second one, which you might not pick up on yet, is that trend line coming up. Okay, usually that trend line is a big headache for those sellers, right? It's bear repellent, that rising support trend line. So now we talked about using the 2-try rule and that 2-try failure, right? We talked about that on the S&P and the Nasdaq. On the gold here, think about now how we can use that and get underneath that trend line. So imagine now, right? Buyers try once, buyers try twice. These are some great trades using that trend line as a level of, in this case, of resistance on the other side. Now, if we really get lucky, there'll be a trend line up there coming down. We could really stack on some of those levels of resistance. The two most important things about the short off the high is going to be, can I get the buyers trying twice, at least twice, and can I make sure I'm selling underneath, right, underneath that trend line, right? Now, sometimes what happens is you'll see something like this, where it'll kind of drop like this and try to go lower like that. You know what I mean? Like, there's no way it's coming all the way back to that trend line. We're not going to go all the way back to it. So if it ends up happening like that, if we see one try and it shoots lower, then what you want to do is look for traps. Okay, your best bet at that point is look for a trap entry. Now, that trap entry oftentimes will line up right with a new channel. You know what I'm saying? Right? Remember, we want to wait for the buyers trying twice, but at the same time, though, we'd like to use that trend line, right? Because it gives you a chance to sell at resistance. If it just drops like that, you're not going to want to sell it too low. okay? Just because we want to sell high, not sell low, and that's why a trap entry will really be the best option if we kind of slip and fall, right, back down into that trading range, right? So just kind of be aware of that as we go, and then some easy targets will be at the other side of that triangle, and of course, other side of that range. Now, what if we make that move higher, right? Make that move higher now. Trend lines here. That looks great. Couple things you want to think about as we go higher here. Usually, and obviously there might be a new channel forming here, if we go higher on strength, this channel will be great. Like I would love to think that that channel will be our entry tomorrow, as we go higher. Remember, if we get that 1, 2, 3 breakout, now remember, it's not enough to see a strong move higher. They have to hold that pullback and go. All right, we see a lot of very convincing what look like breakouts. We don't trust those breakouts. But once we get that 1, 2 go, okay, now it's good, right? Now we know. Buy that first pullback. Remember, first test is the best test. And again, imagine drilling down, finding that failure into pullback combination, right? Coming off of that low. And again, I apologize, the messy scratchings here right now. Not to worry, there's probably 150 examples of that combination trade, right, on our favorite markets in that quick start class linked up in the upper right hand corner. If you haven't done so yet, make sure you grab that. So again, that's the 1, 2, 3 reversal, 1, 2, 3 breakout. We know the market wants to go. I would love to think we get that pullback. What is probably more likely though is you think about it this way, is a move up, a pullback, and a go from there. Remember, this will probably be a big short squeeze, right? Kind of big short squeeze going higher here. So what I tell my clients, I'll tell you the same thing. When the market's moving, don't be picky. Don't be waiting for this really deep pullback, right? Find that really tight channel, drill down to your faster time frame, and grab that. Again, failure, pullback, trap combination off of that low, right? Makes sense? All right, so again, would love to think of a big channel going higher here, but if it's ripping higher, the stronger that thing moves, the further away from the moving average it gets, the steeper and the more narrow that channel should be, right? Stronger it moves, the steeper and narrower that channel is. Don't be bashful with it. Hit that buy off the low of that channel. Nice looking longs there as we go higher. As we go lower, as we go higher, we know how to sell it as well. As we go lower. Going lower, this is where it gets kind of interesting, okay? Because we definitely have this triangle. The triangle's there. You don't want to ignore it. The problem is going to be, though, as we go lower, can I buy this? I can buy it, but we're starting to get a little bit tight, right? Like an airplane seat, right? Starting to get a little bit cramped in there. So what do? We wait for a trap. The trap is what you want coming off that low. Bears once, bears twice. Now, I don't necessarily need the bears to try twice here, but I need some sort of trap, okay? That's the reality. I need a trap as we go. What happens a lot of times is you'll get the failure, right? The mark goes lower. The bears will try to get short. All their stops are sitting right above the high, but nobody wants to trade inside the range. The risk reward ratio isn't that great right there. So what ends up happening is we go up, and I've had so many of these trades backfire in my career. What happens a lot of times is you'll go up for whatever reason, it basically gets rejected, right? And the bears come kicking back down. That trap, that's the money is, right? That trap. So if we stay inside the triangle, traps, baby. Yep, traps are definitely where it's at. Then, as we go lower here, okay, take out some of these lows, get underneath that triangle. That should be where we can get in for those bears coming in, getting short, trap them in, grab that failure, grab that pullback, and rip it going higher, right? Failure pattern, pullback combination, run this thing right back up again. Now, what if we go even more? Like we go into these, right? Look back over here. See what happened over there? See how strong that move down was? See how the bears tried once, right? You don't want to jump in right away, twice, and then back up. That is exactly what we might get over here. So let's say, for example, we really shoot, right? They really shoot. Take out these 81 lows, right? Now, once we go make that move down, what's the problem now? Momentum. Very, very strong push down. What do? Let them try it twice. Let them try it once. Let them try it twice. If we get that trap like that one, that is one of the many, many variations of that setup. It's a great entry. It's a fantastic entry, right? That little trap low. But bottom line is, whether it's a trap or not, it's 2 tries for the bears. You're buying traps, you're buying the stops, right? And again, you're ripping it higher there. So as we go higher, as we go lower, again, if it really spikes and runs down, now you know, right? Let them try once. Don't force it. Try twice. Grab those stops, right? Now, oftentimes, and I don't want to go into too much detail tonight. This video is already getting pretty long here. But oftentimes, when you trap in those bears like that, right, it really rips like that, or you know, you get those bears all trapped in, the market will rip and run higher. When it does that, yes, I would love to grab that channel, you know, because now we have all that space to breathe. You know, now I can buy, still buying pretty low. You know, you wouldn't want this entry right in the middle like that, right? You want it right as it's pulling back here. I mention this because a lot of times it'll go down 1, 2, it'll rip higher, and you'll see another trap right there. Little trap. That's a really good entry, right? That little trap right there. So 2 try failure into that trap entry, and then back up and we go. Trade the rotation off of that low. And then without sounding like a broken record here, as we go lower, if those bears can hold that pullback and give me a breakdown, again, I don't care what direction I trade in. All I want to make sure is do we have proof? Do we have that proof of that breakout? If we do, mark that low, mark that high, right? Remember, first test is the best test, right? First test is the best test. As I mentioned, that 1, 2, 3 breakout, you know what I mean? Imagine now we get above the moving average. Buyers try and they fail, failure to pull back, and we're off the races going lower here. And then, at some point tomorrow, we may find ourselves, if the market does make that move lower, we may end up in a range down here, right? Bear market to a range. What do? Find levels of resistance, look to sell with those failures up at resistance levels above the range. And obviously, we'll hash it out tomorrow morning, right, as we see more details in the trade room. All right, guys? Again, tomorrow's a Friday. Early in, early out. Remember, markets are like a bicycle, right? They're easier to trade when they're moving. So we'll see how much we get tomorrow on a Friday morning. I hope, at the very least, I will see you tomorrow morning at the opening bell. I'll put all of the membership information, all the details you need below this video tonight on the website, or I'll put all the links in the description of the YouTube video. Don't be afraid to call the office. I'm very easy to reach on the phone there. Call that toll-free phone number. Don't let my ugly mug scare you away there. So definitely call the office there. I got live chat on the left. I got live chat on the right. I'm always here to help out, answer questions along the way if you guys need help along the way. All right, guys. Hope you all had a fantastic day out there. We've had a great week in our trade room so far. Hoping for another great day tomorrow. Either way, though, we'll trade whatever the market gives us, right? As always, guys, be well out there. Be nice to each other, will ya? And be here on, not tomorrow, but on Monday's nightly newsletter. That's it for me, guys. Adios, amigos. Bye-bye for now.